Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So in this video, I want to approach the markets in a bit different way in this video. Because in this video, I'm going to be looking at the interest rates. What happened last time through, say, 2006, 2007, 2008, when they finished raising rates, when they started dropping rates. What actually happened to the stock market, and what actually happened to silver and gold? Or actually, we'll just focus on gold, right? What actually happened to gold? Because there's a correlation there, right? Because it's really interesting, because I'm going to share with you exactly what happened when the Fed stopped raising rates in 2006, back then, and what actually happened afterwards, and so on and so forth. It's going to be really interesting to see that, and also how that correlates to what might be coming down the track. Based on what we've seen in the past. And I think you're going to be really interested in this. So you're going to really like it. Guys, you can get access to my trading course for just $7. So click on that link in the description below. Or you can just get access to the Master Trader Lab for free as a free trial. Click on that link in the description below and you can get access to that as well too. Now, here's the thing that I want to share with you, okay? But I've been doing a bit of research here, and it's actually really interesting to see what's really going on here. So if I bring up, let me just bring up this here. So if I bring up this little blurb here, okay? So what was the Fed fund rates in 2006, right? Because what I was doing, I said, okay, firstly, this all started when I listened to an interview from Dow Jones, right? One of the top 10 financial traders on the planet. And he was talking about how he's making his trading decisions based on trying to find similar situations that happened in the past and so on and so forth. So I'm like, interesting. So what it is, I actually went back and I found out, the interest rates. And as you can see here, right, from 2004 through July 2006, they rose to basically from 1 to 5.25. The target rate stayed at 5.25 for over a year until the Federal Reserve began to lower rates in September 2006. Rates in September 2007. Okay, so here's the thing. In June 2006 was the top in the interest rate, wasn't it? So let's go and actually have a look. Let's go over here and let's go back to 2006, and you'll be able to see. Let's go through to here. Okay, so that's 1990. Okay, so if we look at this here, right? So we already went through a big bull market. We were already in a bit of a downturn through here, and look at this here. Let's go to here. So that was in June 2006 was the last interest rate rise, right? So as you can see, right, that last interest rate rise was right here, June 2006, right there. And so what ended up happening after that? We actually went through what? We actually went through a big boom. Now remember, what did it say here? It said that we actually, that was the high at 5.25, and it stayed there for over a year. Now, basically what actually happened for over a year in that, look at that there, right? It's basically from June through to June. What do we do? We actually went through a big bull run, right? Now, here's one thing I've learned from Ray Dalio is the cause-effect relationships. What the government does, what the Fed does is, okay, what's the effect of that? That's the cause, or this is what's happening. What's the effect of that? So it's really interesting to see. So if we go back to here, look at this here, right? If we go back to here, when did they start to drop rates, right? Because we're in that cycle right now, aren't we? We've already gone through the peak. We stayed high for a while, and now we're in the dropping phase, right? So they begin lowering rates in September 2007. So if you go to here, right? Let's actually screw this up. This here was September. Actually, it was more roundabout there, right? September 2007, right? So that was September there. And as you can see, we actually initially the first drop, what? It actually buoyed the stock market, right? It actually buoyed it up. And then we found a top 2, 3, 4 months later. And that's when we started to see the descent, right? But generally what happens, as you can see, right, when the market actually started to drop rates, the first drop here, which was when? September 2007, as you can see, that first drop, what happened? It actually buoyed the stock market, right? It was actually bullish for the stock market. As you can see, right, the very first interest rate drop that we actually had this year, what was it? It was actually bullish for the markets, wasn't it? So the first drop was around about April, May, June, so around about June, right? In today's market. So that's what we can see right there, right now. So if we go to today's market, okay, and let's actually open this up a bit more. All right, so we go to today's market. Look what happened here. So the market dropped down through here. Okay, the market dropped down through here. And then it found a bit of a floor through here. Okay, so as you can see, right, look at this here. Where was they stopped raising rates basically late last year. So this here was when? This point here was when they actually stopped raising rates. That was the peak in the interest rate rise. Interesting, right? If we go back to what? If we go back to the 2006 period, there. When was the last rate rise? That was the 2006 period, right? And what actually happened? We actually went through a big bull run, didn't we? A big bull run. What actually happened when we actually reached the point there in June? What happened? We did what? We actually went for a big run, right? It was actually December was our layer. Was it December, October, November? I think it was December, yeah, right? Our last rate rise there. I'm just looking on another screen here. I can't actually see exactly when there. Yeah, so as you can see, right, I went through there. So and then we actually had, I think it was around June. So around June, right, was around June or around about, yeah. So around June was what? It was around about here, was roughly, give or take a little bit here, right? But around June, for, looks like on the other screen here, was what? When they first dropped rates. So as you can see, right, what actually happened? It was bullish for the markets, wasn't it? We actually went through a big bull run. And now we've come back down again, and now we're in sort of August, September, and we actually had a drop. We actually had a rate drop just recently as well too, didn't we? So and now we're actually pushing up. So the purpose of me saying this, right, was that is the interest rate dropping? Is that signaling that a top is now potentially starting to form in the markets? Because if history repeats itself, then we're not too far from that top of the market. Now, again, we never know, right, guys? I'm just looking at history and seeing how the interest rates, when they peak, when they drop, and so on and so forth, right? You can see it through there. So really, really, really interesting stuff to there. So we should be getting very close to forming some sort of a peak here. Because now we're starting to drop rates. And as you know, right, back in 2007, when they actually started to drop rates, it actually went sideways. As you can see, it actually went sideways for about 6 months, pretty much, right? Went up, went down, and then went up again, right? And then went down, and that's when we actually started to see this sort of action, or pretty much a bear market there. So really interesting here. Now let's actually go have a look at silver and gold and see what silver and gold was doing at the exact same time. So, or actually, should I say just gold? So I'm going to bring up gold chart here. Okay, so I'm going to bring up a gold chart, and let's actually go back through the exact same time when they're looking at the interest rate. So remember here, they stopped raising rates. They stopped raising rates at that. Their first rate rise was when? Right there, right? September 2007. Let's actually go and see what actually gold was doing at that time. So 2007, right? So as you can see, pretty much for a couple of years, pretty much not much going on. Look at that there, right? So that there, right there was when? September, August, that was leading into, right? So that was pretty much September right there. This was the very first rate drop, right? This is the very first rate drop that they had, right, back then. So as you can see, September 2007, but as you can see, right, that very first rate drop, what was that for silver and gold? Bullish, right? It went for a big bull run. Notice how that looks very, very similar to what's happening right now. And then what happened? And then we actually had a bit of a resting phase for a while, didn't we? Went sideways, and then we went for another run. And now we're just sort of petering out, aren't we? Right, another run, and now we can see what happened through there. And then we went through to 2008, where we actually had a bit of a pullback through here, right? We had a bit of a resting phase for quite some time, and then the market did what? And then the market, as you can see, let me just zoom this in a bit more, right? Down here was what actually happened. So if I bring this in just a little bit more, all right, let's bring this in a bit more here, right? So this here, right here, this here was the very first rate drop. Ran up, then we had that there. Then we actually had a bit of a pullback, didn't we? And then we started a pretty big bull market for many years to come. So the question I got to say is, let's go look at this here, right? If we look at this here, what have we had? We've had a very first run up, then we've had a sideways period, and now we've had another run up, and now we're having a pullback. Notice how when we actually got that in 2007, we had that big run up, bit of a sideways movement, and then another run up, and then we just started having a pullback. Is this the very first leg up in an overall big bull market in silver and gold? And then are we now likely to start to see a bit of a slowdown now, as possibly the stock market slows down? And then once that happens, right, are we due for are we now likely to see a bit of a decent pullback out of this? And then the buyers and sellers come back in maybe into next year, and then we start to see some significant move from silver and gold moving up. So guys, I don't know. I'm just sort of looking at the facts for what actually happened last time when it's really, really, really interesting, right? Look what happened. Like we started raising rates when? June, right? June this year. That was June right there. Right there. That was June. Fascinating, right? It's like, fascinating. The last time they dropped the interest rates, that buoyed gold, right? Took off. And then guess what? And the same thing that happened, that was 2007. 2007. Look what happened right now, right? It's the exact same thing. It's just absolutely fascinating, right? So if history is going to repeat itself, maybe we are due for some sort of a decent pullback out of gold, not a crash or not a complete pullback, but maybe we're due for that as things start to unfold with these markets. And then maybe if we go to that weekly chart, then maybe, if we look at this here, even if we do get some sort of a decent pullback down towards this major, there's a major support level around about here. Even if we do get some sort of a decent pullback through there, I don't believe it's going to be. I don't believe it's going to change that. But maybe we're due now. For a good decent pullback where most people who are in silver and gold right now, what do they believe? They believe it's not going to happen, right? They simply believe, it's not going to happen, and and if you guys have been trading for a while, right, one of the worst things you can do is to say, this will not happen, it's not going to happen, blah blah blah, right? It's what you think is not going to happen is probably going to happen, and so many people are bullish silver and gold right now that we're probably likely to see a nice decent pullback out of the markets. Make sense? So we're probably likely to see that. Because only because so many people are positive on silver and gold right now, and what silver and gold, or what gold is probably like to do is do a bit of a shake and bake through here, get people nervous, get people out, because that's what the market does, and then we're probably likely to go for a big bull run. I don't know, guys, but all I'm saying is that don't be oblivious to what's happened, because as you can see, if you look at the history. Last time we dropped rates, it was a big bull run, then a sideways movement, and then we went for another run, and then we actually had a decent pullback. This is the exact same thing that's happening right now, right? Big bull run, sideways movement, another move up, and now we're going just through a bit of a resting phase right now. So don't be too surprised if we did see a decent pullback, not a crash, but a nice decent pullback, and then a continuation. Maybe that pullback's gonna last for a few months or so. So just be patient, okay? Be patient with whatever you're making decisions on. And please don't listen to these pundits out there saying you should get in now because gold and silver are going to explode and you're going to miss out and blah, 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 all this sort of stuff. It's okay. You're not going to miss out, okay? There's going to be plenty of opportunities out there. So Really, really, really interesting stuff, guys, that I'm seeing through here, when it comes to trading these markets and looking at what's happening right now. If history is going to repeat itself based on what actually happened last time, based on the interest rates, we're getting very close towards a top in the markets, and that's going to start to cause the markets to start to pull back. So maybe it's going to be towards the end of this year more as we start to get into, September, October, November. Maybe that's going to start to cause that to go down. And then maybe when that happens, right, silver and gold are going to have a bit more of a pullback, and then maybe, depending on what happens with the rates, right, but maybe things are going to start to get heated back up with gold as well too, and silver there. Really interesting, guys. This is just the facts for what it really is. Let me know what you think in the chat box below, because this is really, really, really interesting stuff that I'm looking from a macro level. I'm a technical trader, but this is really interesting looking at the fundamentals and the macro sort of things. And it's fascinating to see what happened last time. And especially when it comes to gold, right? As soon as they dropped rates, that was massively bullish for gold. What happened this time? The exact same thing, right? So the very first, one thing I've learned out of this is that the very first rate drop, I know it's a bit late now, but I know this for next time. The very first rate drop is bullish for stocks and bullish for silver and gold, or at least gold for that matter. Makes sense? I think silver took a bit more time to actually go from there. So I hope you enjoyed this, guys. Guys, if you'd like to get access to my 12-month weekly coaching program, if you'd like to become a private client of mine, then there should be a link in the description there. Click on that, go join my next web class, and you'll be able to get all the details about becoming a private client if you'd like that. All right, guys, I'll speak to you next video.